privilege to be back here again. This is my third year at the conference. Happy to be here. Conversation today with the panelists is about network design and how supply chains and networks actually affect the business and overall the resilience, the capabilities that are offered through technology, through optimization, that actually support the resilience that became so important with COVID. If we take a step back from that conversation in terms of supply chain networks, what really defines the success for companies is actually three factors. There's the financial aspect of the companies that is important, the metrics that are being talked about and metrics that are portrayed, the EPS, the margins, the revenue, and the growth. The second is the customer experience, the customer success, and the customer satisfaction. And lastly, but importantly as well, is the innovation and future growth. As we start to look at all of these three factors that define success at companies and overall, supply chain plays a critical role. And the design of that supply chain affects all of these metrics. So as we talk through this, and with the panelists, I think part of the conversation is going to revolve around how the financial aspects, the operational aspects, the customer satisfaction, and the innovation play a role in designing those networks and ensuring that we have a network and a design that makes sense for the organization. So COVID taught us that resilience and innovation weren't just buzzwords for a presentation. It's very important and critical for the success of companies that this is integrated into their supply chain design. And that's part of what we're going to share. The experiences and this wonderful panel that we've got from industry experts are going to share some of the experiences, some of the successes, some of the failures that they've gone through and seen that will enlighten us on what to look for, what are the areas that we need to focus on when we look at supply chain networks and design. So with that, I'd like to start to introduce our panel. Das, would you kick us off? And they will share one of the experiences that they've had that will help the conversation get going and also help introduce themselves.
Sure, thank you. We were discussing right before coming up here what would be the best way to do this. So one of the recommendations that Sam had was we introduce ourselves, who we are, and then we talk about network design and optimization and challenges and what stories we have to share. And then if we go through this round, we have 7 people. So by the time we have 4 minutes each, that's 28 minutes gone. So then we will open it up for you guys to ask questions, so this will be interactive. So I wanted to give you that perspective real quick. I'm Dasgupta, Chief Data Analytics AI Officer at Saatchi, which is an advertising agency, but that's not the reason or that's not the line of work that I'm here for. I will share stories from my background, which started as a supply chain solutions engineer with a company that Sam and I used to work together back in the mid-90s called I2 Technologies, which was one of the first companies that came up with supply chain planning and optimization solutions. After this, I have had a lot of boutique consulting firm experiences building out supply chain consulting teams, culminating eventually in an executive director role at Ernst & Young, and then an associate partner role at McKinsey. After that, I changed gear and I went to the driver's seat. This time I went to Amazon.com. I had the opportunity by invitation from an ex-McKinsey partner who invited me to join there to run all of North America for Amazon Customer Experience Systems, or ACES team. And that consisted of 3 sub-teams. One team I called Think, which was data scientists and data engineers and business analysts and subject matter experts, etc. One team was called Teach, which was Lean Six Sigma Master Black Belts. And one team was called Deliver, which were the 113 at the time fulfillment centers, their general managers who were dotted reporting to me. So I'll share stories from that angle. But also another part of my introduction is that I have been teaching, very fortunate to be teaching in this program, in the MSG SCM program from its very first year, and cohort 1, cohort 2, all the way through the latest cohort 11. I'm so proud to see you guys here. And I will share a story on what Sam has said, which also involves one of our very first cohort members who may be in this room. Sally Canary, are you here? I know she was here yesterday. She was there the day before. So Sally was one of our students in this program who was then my TA, and then after that I brought her over to Amazon, and she worked for me and in the team that I ran, ACES team, and together we did a fantastic legacy that I left behind. I will tell you the final result that all of you guys can relate to, but I will go back to how the problem was solved. The final result is a legacy we left behind. Every time you get a package in your delivered to your place, you see an email that comes with an image that the package was delivered to your door, don't you? So we started that. Now, how did we get there? Amazon Customer Experience Systems. Problems don't come to us as, hey, this is a problem on a platter. This is, a network optimization problem. Can you solve it for me, please? Problems come as problems, right? So Jeff Bezos gets a lot of emails from sometimes happy and sometimes irate customers. And one email, if he receives 2 or 3 times the similar theme, he will flip it to his direct report with a question mark. And you're supposed to answer that, and you're supposed to answer that with huge amount of research and work and data and insights and actionable insights, not just a line. The easiest way to get fired from Amazon is to say, oh yeah, that's nothing, we'll take care of it. So you literally have to work really well to get to that answer. So I got that from Dave Clark, who was, at the time, the senior VP of operations, who is now, by the way, is the CEO of Flexport. So Dave flipped it over to me and said, find out what's going on. The email was, every time we were taking note of how many returns were coming back to us, particularly on expensive items, we will get an alert like that. So large screen televisions, which are more than, let's say, 45, 50 inches, they were coming back at a rate of 5.6%. And that was way too high than our expectations. And, and people were writing, emails that we are not happy about it. So what do? So we actually wanted to do a complete root cause analysis of it. And we started talking to our general managers of the heavy and bulky warehouses. The fulfillment centers are designed in 2 different ways in Amazon. Many of you may know that. One is a heavy, bulky type, and the other one is a sortable type. So we started doing research on it. So the data science team, the think team, went through a natural language processing using sentiment analysis to go through millions of consumer complaints or return reasons that they upload, and they found that some very interesting themes were coming up. Themes like, if there was a hole on the package, they assumed it was the television inside was defective or damaged. If there was, the package itself was looking slightly walked on or something like that, of course they will be worried about it. Then we found out that maybe Walmart had a special deal that day, and they decided to return it, and they just marked it, defective or damaged, so they don't have to worry about paying those freight costs or whatnot. Then we started looking at the warehouse, locations, and we found that, well, in some cases, televisions were traveling more than 500 miles, and the probability of a defect or damage to happen was exponentially increasing after that magical 500 and something mile mark. So then we had to do network redesign, which means we have to now make sure that we allocate inventory, and there is a team in Amazon for that. It's called SCOT team, Supply Chain Optimization team, and they do the math programming. Students who are always wondering, why should I take linear programming, nonlinear programming, integer programming, network programming? This is the core of this business. So that's how they figured out what would be the optimal locations of the fulfillment centers where we should be having enough inventory so no large screen television would have to ever travel beyond 500 miles. Then we looked at, okay, how are the televisions located? We saw that they were stacked up to like 30 feet, ceilings. So we decided, okay, what's the optimal height that we could stack the televisions up? And believe it or not, we invited 4 television manufacturers to Aunt 9, which is a location here in Inland Empire, and we conducted drop tests. You would drop those televisions and see how they break. And then you would take a 3D image of it to slow down and see in slow motion how they're breaking. What are the sensitive areas of that television? What do we do for that? Then we found that, okay, if they come with a regular package, it would not work. We have to overbox them with additional dunnage inside them, right? Then we also looked at how the folks are carrying the TV stacks. Are they slanted one way or the other? If they're slanted, then imagine what would happen to the television, which is in the lowest of that whole stack. Then we decided that let's do something to correct these behavior so that they're not, the forklift person is not holding the television on its face, but on the sides, and they're shipping it the right way. They're going erect. They have enough dunnage in the truck. The inbound is not something that's defective already. The outbound is something that's not defective going out. It is a handover from math to operational execution, because without that execution, no amount of data science or artificial intelligence will ever be able to help you. So what we did was, Sally and I decided that we're going to take all the warehouse senior managers who are in charge of heavy and bulky and have them take a Kindle picture after each shipment is ready or when they're being received. This Kindle picture would be uploaded to AWS Cloud, and then it will show us, there is graph neural networks that does visualization of those pictures, and that will tell us that, okay, there is an alert, they're slanted or they're broken or something. So that immediately did 2 things. It changed the behavior of the fulfillment center folks, how they are doing the right thing, if they're doing the right thing, and also, the huge percentage of fall from that. So 5.6 to 1.8% in 6 months of behavior change. And then we found that there are some other areas that we cannot really control, like if Walmart is giving you a discount, what do you do about it, right? Once this was successful, I'm proud to say that next year it was decided that all the 3PLs and even including Amazon Logistics truck drivers would have to take a picture when they're delivering a package, because we were getting complaints, package broken, package lost, package wet in the rain. It got lost in the bush, so they would have to take a picture that it's in the right place on your porch, and then they will upload it immediately to AWS, and AWS will send an email to each of you showing that your package is there on the door, which brought down a total impact in 1 year of $100+ million given Amazon's huge network. That is the story that I wanted to share with you, that network optimization was a part of a bigger problem statement, but we were able to use some of these findings using data and execution working together.
Thank you, Das. That was really helpful.
Thank you.
In sharing some of that and the basis for the technology and other optimization tools. Jatin, would you like to share?
Yeah, good morning, everyone. My name is Jatin, Raina, and I'm USC alum, proud to be here. Recently celebrated 20 years, 2023. So happy to be back on campus. I've been back many times, but my first conference. A lot of great topics that resonate a lot with me. My first decade in the industry was in heavy infrastructure construction. So a lot of conversation about the ports, about the highways. Personally was involved with the Carmageddon project that I think a lot of you ever lived in on the 405 know about it. And the metro rail lines that are connecting various cities. And then the second decade, I moved to Amway and focused on manufacturing, network design, and optimization. So a lot of you know Amway as a direct selling company. They are an $8 billion company, but they're 60% of their share. They have three main businesses. They have health, beauty, and home. And 60% of their revenue comes from the brand Nutrilite, which is a competitor of Herbalife, and it's the largest nutrition supplement brand in the world. And so hearing about a lot of these conversations, my responsibilities are global capital project management and setup of manufacturing facilities for Amway. We've had a lot of conversation about things being made in China, coming back to the US. The unique proposition of Nutrilite is an Amway as a combination, right? It's a direct selling company. You need to send the product to a distributor, and then you need the distributor to sell it to another person, and that's how the company makes revenue. However, there's three main principles of the product from a distributor's perspective. Number one, they want product availability, 100% at all times of all products. Number two, they want the product with the highest claims and efficacy in line with all the regulations of the various countries. We distribute to about 55 countries around the world. And number three, they want it made in the US. So the third part was very tricky for us when the pandemic hit, because 100% of the nutrition products that we make and sell are actually made in the United States. We have plants in California, in Michigan, in Seattle, and then 60% of the crops and the ingredients that come from them come from our farms, which are in Brazil, in Mexico, Trout Lake, and we have partner farms all around the world. So we really had to solve the problem in a reverse way, where the pandemic hit and we had to make the product and then ship it to the rest of the world. Now, there's two exceptions to this. We have a manufacturing facility in China and one in India. And that's because of, the government regulations of making the product and packaging it in the country. However, all of the granulation and blending and mixing of the product still happens in the US, and we had to send it back to China and India during COVID to make it happen. So the story, some of the experiences that I want to share with everyone is, we've talked about how did we solve for some of these problems, right? We obviously, very simple, first things first, right? We quickly looked at the data and we recategorized our product, especially in the nutrition business and in the beauty business with the premium segment. And we recategorized the product that gets us the most revenue. And we said, okay, these are the A-level items. We tripled our inventory of the raw materials, basically increased our inventory of all of those products coming in, stocked our warehouses, rented whatever warehouse space we could so that we could actually make the product. Now, that's easy. Second part was the human capital. And I think the panel yesterday was very energizing. We needed a lot of partners, right? We have partners who actually come to work, right? You can have the best machinery, you can have all the ingredients, you can have the best utilities, but you need people to make the product. And the one thing that the company did very fast was they understood the need to take care of people. We started having these culture surveys very early into the pandemic. People were provided a lot of nutrition supplements for free so that they could take care of their health and their families. Care packages were sent out every month as an incentive so that folks could continue to work, and we worked 24/7. I think typically in a year we would make about 6 billion tablets in our plant in California. We made 9, and we just kept working. But the culture and taking care of people, right? Making sure we communicated with them that we understand you are taking a risk coming from your house into a manufacturing facility and making nutrition products that can help the world, provided them an incentive, and then we could keep going, right? So culture, always understanding what your workforce needs, right? Although they may not be, your C-suite executive, but always understanding what they need, I think was critical to our success in actually making the product and then shipping it. Now, the third issue was, how do we get it to the countries, right? Our top 5 regions are Korea, China, Malaysia, Thailand, and yes, there was a lot of availability of containers going out, but they're still stuck in the ports, and typically our network design would allow for 30 days of port leaving Long Beach and getting to Korea. Well, at the peak of the pandemic, it went up to 102. And then again, at that point of time, we used whatever data we had to almost increase our inventory by 40% so that we can have these products in those countries closer to where we can get them to the consumers. There's a lot of last-minute partnership with 3PL companies, again, in those countries so that we could get that in and then get it into the hands of the folks. So yeah, I had to think differently, and it was a very exciting and satisfying experience. Hopefully we'll talk about it a little more.
Absolutely. Thank you, Jatin. This was really helpful. Given that segue, we're going to move slightly differently. Madhav is going to share the perspective on in doing all of these network changes. As we start to redesign our networks, there's a need for capital. There's a need for capital to actually have the inventory, be able to hold that inventory, as well as to build the facilities in the right locations at the right time to be able to support that network and the infrastructure that's required to support it. So Madhav, why don't you share some of your background?
Thank you, Sam. Thank you everybody again for inviting us. My name is Madhav Goparaju. I'm with Bank of America. I work in our global trade and supply chain finance business, and I lead our digital transformation efforts. Now, so much of the conversation that we hear at the summit is very exciting because we, as a financial institution, are the consumer of all of the data that is generated by each one of you. And I'll share a couple of examples of sort of kind of bringing it to life in terms of why this is such an important endeavor for us and for the industry at large. So if you think about what the bank actually does is the business that we're part of, basically we service all of the corporate customers. So it could be a buyer in the US and all of their supplier networks around the world. And the part of the business is basically depending on where the commerce transaction lies, we are in the business of either providing credit at the very beginning of the cycle or at the end of the cycle. So when I say end of the cycle, it's kind of, you produce the goods, you've sent it, and you need to get paid, or receive funds. And then the third aspect is really just executing a payment. And as you guys know, on the payment side, there's been so much innovation that has happened, a proliferation of digital wallets and this and that. But a lot of the challenges still reside in the supply chain, before the payment actually happens. So from a bank perspective, where we are sitting and where digital and all these technologies and these networks sort of come to head is because we are getting manual information from corporate treasuries, corporate procurement, shipping companies, insurance brokers, and a whole host of variety of players. We are probably one of the top 5 players in this space globally. We operate in more than 30 countries. So as you can imagine, given that we're in such a highly regulated industry in terms of financial services, we have to work through and navigate through regulatory data requirements in different countries, digital frameworks in different countries, standardization in different countries. So if you do supply chain optimization in one region, but if there is a connectivity point in the supply chain network in another region, and we're not able to solve for that, that means we get digital data from one part, the rest we get paper. So I give sort of one example to kind of bring all this to life. For a jump into that, so as you think about the broader sort of supply chain network, right? Depending on where the need is, from a bank perspective, we don't have visibility to the actual container or the information in the container. So when we execute a payment or we authorize the release of the payment, it's all predicated on actual physical information that the banks receive. This could be a packing list, a commercial invoice, et cetera, et cetera. So we are connecting to various corporate ERP networks, whether that is SAP or Oracle or any of the other ones. we're connecting to various ports. So we're in the mission of data aggregation. The more digital data that we get, we can make better credit decisions, and we can sort of provide more liquidity into the overall end-to-end commerce cycle. So I'll give you one example of a product and how we're trying to solve for the challenge. So if you, for a certain segment of the corporate market, for retailers in the US, if you have suppliers that are, in the Far East and other emerging market countries, the way the product works today is, the buyer and the supplier, they enter into a contract on what they're going to buy and produce. Then that transaction and that document does not sit with the bank, right? It's within the corporate procure-to-pay networks. So the only way they can send that information to the bank is it can either come through an ERP connectivity into a corporate network, or it comes through some other form of file format which the bank gets, or it can even come by paper. So we aggregate that, and then the corporates then have to send to us from all of their suppliers a set of documents to show proof that they have actually shipped what they have done, right? So then we get reams and reams, literally, of paper that we then aggregate against the original transaction. Then what the bank does is we actually physically, people are checking the paper documents to the original transaction. And once that matching happens on a set of criteria which our corporate customers tell us, then we execute the payment, right? But there is an elapsed time or process that happens. We get all of this paper. Then in between, in this cycle, the documents might be wrong. There might be goods that are missing. So then the bank basically says, hey, there's a discrepancy in this document. The whole cycle starts all over again. Then we send it back, right? So the question, so how do we solve this problem? So we've done a variety of things over the years where we've taken, these paper documents. When we say digitize, we kind of, take that, leverage sort of some form of image capture, extract some of that data. But the problem with these global supply chain networks is anybody who's seen documents originating from countries like India, very hard to read. You don't get 100% accuracy. So, you get 60% capture rate, then the other 40%, banks still have to have people manually, reading that stuff. The second challenge that you have is, some things I shared yesterday during sort of the digital transformation sort of views that we provided is, if you have a global supply chain network, if 40% of that supply chain is digital, but the rest of the 60% are manual, you haven't really solved anything, because your entire network is still sort of manual from that perspective, right? So for us then, we've spent many years on how do I take some of the paper, how do I take some of the digital, and then make it all digital. That's a complicated effort for us. Now, why we are excited at the current time and why we are embarking on this sort of very different thinking is we are bringing technologies from artificial intelligence, machine learning, some distributed ledger technology, and partnering with very large technology providers to basically do this matching of documents all digitally online. And we also, from what we've heard from our customers, corporate clients, is every supplier in our network, because some of these very large retailers have 10,000, 15,000 suppliers sitting from Vietnam to Cambodia to everywhere, and they're all not digitally ready. So you have to have a process as a bank, to take all of that paper, digitize that paper, feed that into a digital network, then that can be auditable, transparent, all of the things that can withstand compliance, fraud, and other regulations of the bank before we can actually execute a payment. So you can imagine the complexity that drives. And this is not something that the banks can do just by themselves. So we need an ecosystem of partners. So we need governmental agencies that are supporting more digital frameworks, digital data standards, so that it's all not manual. And obviously that is, that digital maturity is different in Western developed countries versus emerging markets, versus countries like India and China and so on and so forth, right? So, we are embarked on this sort of journey. So I wanted to kind of just give you guys, because so much of what we hear at the summit is very much around physical supply chain optimization, technology, deployment, but where we as a financial institution we're sitting at the tail end of all of that data that you guys are producing to drive capital into global commerce. So the more data that gets to the financial institutions digitally, we're able to make better credit decisions because it all depends on where the capital is needed for the commerce cycle end to end. If capital is needed to set up a plant or to even manufacture the goods, the banks require even more stringent data requirements. So we know that it's actually what is getting produced, right? So all of that drives the data need. At the end of the day, it's really all about data, right? And that data aggregation is driving compliance, fraud. And what we've also seen over the last sort of couple of years is around the supply chain network, there has been a proliferation of innovation, but a lot of these fintechs are addressing pain points in this financial supply chain at point solutions. Like we have fintech vendors that only specialize in ESG metrics in the supply chain. So is financing getting to the right partners in the supply chain, or women entrepreneurs in that supplier network getting the capital that they need? Before all of these fintechs came in, banks had no way to know that. So now you have fintechs that are producing ESG indexes where they are tracking through various Moody's and other analytics providers, like giving scores on how these things are. There are other fintechs that are looking at fraud around documents. So is somebody shipping around the same fraudulent documents in different locations to game the system and get paid, right? So we are a consumer again of all of this information. So we need to have sort of a digital platform ecosystem approach, because we can't go and buy all these components and build, because it'll take us forever, and the pace of innovation is really accelerating. So we're on this path of we want to consume as much of this data, aggregate this data. So when I hear all of the folks here talking about all of these innovative technologies and how all this can sort of improve, we get excited because it helps us. And then obviously it's a circular loop. Then we can provide capital back to the network and drive commerce more frictionless and transparency and all of that. Cyber is a big issue. You guys have heard that. So more digital data means, from a financial services perspective, we are very, very stringent on needs of how do we protect that data. What are all the cyber security needs that we have. So anytime when we talk about this digital ecosystem, to then bring these partners into the bank ecosystem, the bar is very high. So if you're not a very mature technology player, but you're a fintech, it's an endurance test, to bring them through. So Sam, hopefully that helps kind of set the stage, right?
I think as we start to look at this, I think the focus has been on the physical side.
Yep.
But as we start to build these networks, part of that is looking at the technology, the support that is needed as we start to scale these networks and build out these global supply chain networks.
Yeah, so I heard, I don't know if Jatin, you mentioned like containers, and so the documents that I talked about, the document basically says 60 containers came in and they have X, Y, Z. Bank has no way to know what's actually in the physical container. So we just look at the physical document, match that with the original sort of the contract, and we execute the payment. Now, if there is nothing in the container, the bank doesn't really hold that, right? So the more data you guys kind of generate and provide that to the bank, it just makes the entire loop that much more secure and transparent.
Absolutely. And actually, Micahel can maybe help with that and share some of his background and experiences on
Sure. Yeah, I wasn't
side.
Nervous until Madhav started talking. I was not necessarily about the content, but I had a flashback to a previous job when I worked at Maersk. I did Mayor's Trade Finance. And
So you know what I'm
it
talking
wasn't necessarily the most successful endeavor in that it got spun down pretty quickly. They probably shouldn't have trusted a 27-year-old fresh out of business school and a 90,000 person company to launch a skunkworks project in North America. But needless to say, it is a very difficult thing. It sounds like y'all figured it out. I'm more on the container side, so I'm Michael Rentz. I'm the Chief Revenue Officer for Gnosis Freight. That means I run the commercial side of the business, spend most of my time talking to people, convincing them to use our software, our platform. We're headquartered in Charleston, South Carolina. We most commonly categorized as a container visibility solution. I believe that is somewhat of a misnomer in that the market itself is changing. We actually came up with a new term that we found that resonates with our customers, which we call container lifecycle management. So we feel that the containers move in those life cycles, and depending on the issues or where you are in the supply chain, some of those different life cycles are more important at certain different times. So we have a unique perspective as a software vendor in that we're agnostic. It doesn't matter. We don't move the goods ourselves, but we kind of sit as a middleware between all the different parties. The biggest segment of our customers are the BCOs, the shippers, the retailers, for the people that don't know what that means. And so to kind of explain, we're unique as a software provider in that we also fully configure our system to the network design of that party. So take a BCO, for example. They have their own strategy, their own theory that they want to implement, where their warehouses are, where their DCs are, what their carrier splits, freight forwarder splits are. A lot of the times when you engage with software, even if it's outside of our industry, you have to fit your systems, your processes to their software. You have to use their drop-down menus, their acronyms, and so that's kind of counterintuitive and certainly not productive when you're in an industry like logistics where there may be 10 steps that there may be 10 steps in general with moving a container, and people use 8 of them in the same way, but it's those 2 different steps or those 2 different ways that they've optimized their network that they feel is their competitive advantage. So asking some of these big legacy companies that have been around for decades to change that and get their entire organization to change that in order to use the software is a very big barrier to entry. We try to solve that by fully configuring our software to fit hand in glove for them. The way that we do that is, although we're logistics software, we're fundamentally a data science company. And it's kind of a non-starter if you're going to do anything in this space with technology to not have your hands on good, timely, accurate, trustworthy, low latency data. We started as just software, and we were buying data from other vendors who are now considered our competitors, but we got tired of communicating that to our customers that the data was inaccurate, so we set out a few years ago to build our own data model. It worked well enough to where we could stop buying data from other people and just rely solely on our data, and then that has emerged as the fastest growing piece of our business. So there's really 2 sides to our business. We have our software that we call container lifecycle management. We have our data that we make available via API. On the software side, it's primarily BCOs all over the world that use it. With the software, we aim to replace the old current SOP, which is most commonly emailing Excel spreadsheets back and forth between all the different parties. We have about 40 different modules that do that up and down the supply chain. On the data side, it's a wider variety: freight forwarders, NVOs, ocean carriers, other visibility providers, technology providers that, again, just want trustworthy data. So 2 examples of that. You have the configuration, which gives us a unique view. On the not-so-mundane side of that is a good example that we talked about, where a lot of the times international logistics gets looked down upon. I was told by my mentor in the industry you can't perform plastic surgery when you're bleeding out on the table, and a lot of the times logistics people are solving big problems. Some of the fancier things that we can do, when demand's really high, like during the pandemic, everybody was just worried about keeping the assets moving, avoiding things like demurrage and detention. That's kind of died off. Demand has dropped off. It's not necessarily the biggest problem. The vessels are showing up on time, getting the berths when they're supposed to. But now we have conversations with our BCO customers about inventory optimization. So we integrate with our customers' ERP systems. We can tell them exactly SKU level, PO level, item level details inside the containers, and depending on the commodity, as everybody probably knows that's in the industry, the inventory shows up on your balance sheet as soon as the vessel sells if you're buying FOB. That's become a bigger issue now with interest rates rising as high as they have. It's a very expensive problem. Certain customers that are just in time, automotive, OEM, automotive adjacent, won't list those goods for sale until they're in the warehouse, and there's an extremely high likelihood they won't stock out and they can deliver that. So with our bigger BCO customers, we're no longer solving demurrage and detention primarily, we're doing that, but we're helping them explore in a very trustworthy way to get some of those inventory items off their balance sheet much earlier in the process before it arrives at the warehouse. So a lot of people don't think that that's a logistics problem, but the people that use Gnosis, the inbound logistics managers, international logistics managers that use Gnosis are working hand in hand with finance to come up with creative ways to drive profitability. So that's a little bit about us. Last piece, I was going to say this until I had flashbacks, was it's a great honor to be here. I'm from South Carolina. I went to a different USC. And it's a privilege and very humbling experience to be up here. It's an impressive community. Everybody's really impressive, great opportunity. It's always intimidating to speak before a bunch of logistics experts that have decades of experience, and I'm pretty new to the industry, only been here 10 years. As well as being a data science company, Dashi showed us around, and from my understanding, all the students here are learning to code primarily in Python, which is, we have 30-something employees and 25 of them are engineers, and we only use Python. So in no way am I going to be an expert today on the stage, but a great opportunity. I'm very appreciative of it, so thank you.
Thank you so much, Michael. That was really helpful with that technology platform. Andrew, if you could share a little bit. We've talked about Amazon, we've talked about Amway, the large companies, but you're doing something different. Why don't you share that with the audience?
Yeah, sure. So my name is Andrew Bagwell. I'm also a graduate here from USC, the Viterbi School. So, bit down the road, but coming, meeting halfway here. It was a bit jarring yesterday walking around campus and seeing my old dormitory being actively torn down, but time marches on. And so I run the engineering group for the Ryder e-commerce division, right? And so when people think of Ryder, probably still the public perception is kind of more of a trucking and transportation company, and it's a big part of the business, right? And so fleet management services, truck rentals, things like that, but just last year, just crossed over the 50% threshold revenue-wise for the supply chain services side of the business, right? So more traditional 3PL type operations, dedicated transportation fleets, things like that. And with a lot of deep expertise in automotive, aerospace, CPG, all types of verticals. But about 2 years ago, Ryder went out looking for a way to bolster e-commerce capabilities and came and found the company that I was with, a company called Whiplash, to kind of help usher in that part of the modern supply chain world that we have here. And so as that, we were kind of a mid-sized 3PL Whiplash at the time, focusing on e-commerce and omni-channel distribution with expertise mostly in apparel, home goods, things like that. And so today now as becoming part of Ryder e-commerce, we certainly plug into a lot of mature, sophisticated supply chains for our customers, right? We're a true outsource, right? Looking to be efficient, cost-effective, and well-servicing to their end customers. But probably the more interesting part for today is we also kind of have this major niche of kind of emerging brands, right? And so these are not the most mature companies, they're just starting up. And so maybe they're on their second warehouse, right? And so companies that are digitally native generally and growing at very rapid clips. And so these are the type of customers we run into, and their year-over-year projections are 50% growth, 100% growth, and they're realizing that or exceeding it in a lot of cases, and sometimes missing it. But it's an exciting time because it's one thing to plug in and be a partner with somebody and be a part of their supply chain. It's another to deal with folks that are reaching meaningful inflection points and being able to take on somewhat more of a consultative role, right? These are the types of companies that are coming to us because they're growing so fast, they need to focus on their product, they need to focus on marketing, they need to focus on sales and production, and are looking for somebody to take distribution off their hands. But that can mean a lot of different things. And so, to the topic of this particular panel and network design, right? One thing is a lot of these companies come out of the gate and they're in one distribution node, right? Because that's close to where their founders lived. And so they found a local 3PL, local warehouse to grow with, and now we're looking to expand. And so we're able to work with them at this critical time of what they want to do with their inventory and what makes most sense. And these are groups that maybe don't have full-on, full-blown supply chain departments. They don't have analytics departments. So they're looking for our assistance. And so it's an interesting game because we have visibility into a certain amount of their data. We start dealing with their product. We start to understand it. And so we can take that analytic step that they necessarily can't do and present it back to them as kind of a holistic view so we can start making good decisions together because it's in everyone's best interest to grow together, right? Because that's how we do these things. And so, when we look at that, in the apparel space, SKU depth is very meaningful, right? And so when we think about apparel and are we all in one node? And so when you order something online, is that being fulfilled from one location, two locations, having massive cost impacts? And so what is the next level of SKU analysis? What are the centers of gravity for shipping distribution that can be put together and then packaged back in a way that's easily understood, understandable, so that they can start making decision. We all probably have Das and his cohorts at Amazon to thank for certain shipping expectations, right? But that's somewhat an evolving field too, right? And so it's a big conversation now. Is 2 days still an expectation? For higher end goods, is same day delivery in major markets still a need? And so what we like to do is partner with our customers on what are those alternate shipping options? If that's a requirement, that's a requirement. And so where does your inventory need to be? What are the additional carrying costs of being in multiple locations? And what is the technology that you would need to support that? Because in the same mold, maybe on the first ERP, right, maybe have some light OMS management. And so where can we offer tools that allow you to split orders, allow you to manage inventory in those ways, and be able to direct things there? And so it's an exciting space to be with some of these customers who are growing, who are doing as much volume as some of the larger, more sophisticated players, and are on an upward trajectory to help them grow in a profitable way. On the flip side, when we talk about resiliency, then it's on us, and if any of you are part of or looking to potentially go into the dark but exciting world of third-party logistics, right? It's on us to be able to absorb a lot of that resiliency. And so, I challenge my team of engineers every day is how do we build these things to be robust, right? How do we design a warehouse so that when the projections aren't right, and the one thing we know is these projections are not going to be right? It's just a matter of time. We're going to have a discussion, but it can't be a catastrophe. How are we building these things so that there's flexibility within these operations, both from a traditional racking infrastructure, but then also on the automation side, right? And so we've somewhat become allergic to things that get bolted into the ground because, the world of scalability and expansion is become so critical in the automation space, which kind of ties to the explosion of AMRs and various other robotics that we can scale, that we can turn in, that we can unbolt from the floor and move around to be able to support that. So, it's somewhat of a balancing act between optimization and resiliency there. So we just try to find that sweet spot and work with our customers to have that comfort level.
Thank you so much, Andrew. With that, I know we're almost running out of time. We thought this was going to be a 5-minute each discussion, but it's sort of dragged on with great experiences. Laird, if you can share a little bit about your background experience.
Thank you, Sam. First of all, thank you for inviting me back. This is my 3rd or 4th year now. This is a great program. I confess I have degrees from Michigan and Michigan State, so welcome to the Big Ten. Seriously, we love the fact that you guys are coming. We wish Ohio State would go to the Pac-10, but, and I want to, we talked about taking 5 minutes, and all of us had great experience, and we can't tell time. And the clock actually didn't start working for a long time.
Yeah.
I was looking at this. I've got a lot of experience like they do. I've spent, oddly, my undergraduate degree was called management, but it was all the classes we now call supply chain. And so I was very fortunate. First class in fortune telling, and actually forecasting, which is really like fortune telling, right? And I've used that over the decades. I've forecasted Latin American and South American currencies when I was working for a computer company because we couldn't hedge those markets, done a lot of complex things. More recently, and I want to support what Das and others have said about analytics, I am unable to separate, and this is for the students, I'm unable to separate analytics and supply chain. You can't have one without the other. You can't have a supply chain without operational excellence, supplier performance, financial flows, all of these things are challenges.
Please use this for this year.
We working?
Yes, now.
Is that better? That's good. That'll save my voice as well. And I want to save a couple minutes for Sam, but I want to tell you a little bit about some of the work we're doing now. I've got a colleague, we're doing some AI work. We're doing a suite of AI tools because one of the areas that we found deficient was forecasts are always wrong, right? We know that. We've developed some tools with one of the world's largest supply chain companies, organizations as a client, and we've been able to reduce that forecast error dramatically. We can talk in detail about all the problems with that and the software and how they forecast. But in doing so, we found out the client has a lot of other problems as well. And so this is a client with a lot of consumable products. They have vehicle fleets and a lot of sustainment of these long life, highly engineered vehicle systems. And so we've gone into the reliability side, which is also my background from the automotive industry, and taken a look at not only the traditional reliability capabilities to predict what demand is in the supply chain, but more accurately predicting using AI so we can actually link the performance real time to what's going to happen with time lags and lead times in the supply chain so we have more time to plan. And so for the students, you're in a great program. This is really a top-notch program. Take all the analytics you can get away with now and after you leave, right? Because you're going to be working for these folks. And analytics helps you with the technical understanding of what's going on. It doesn't help you with the decision-making you then use it for. And so you have to have the business side and the analytical side. By the way, there is no clean data. It doesn't exist. And if it does, don't trust it. Because somebody has sanitized it in ways you don't understand. So if you know how they cleaned it, that's fine. But if you don't, and I've had these experiences, go back and get the raw data. It's messy, it's ugly, and it's a royal pain. And it will help you to tune in what you understand. Because it's got to be driven by your company's strategy, your customer segments, your markets. Every supply chain's different, and you want to make sure that as you're working through the supply chains, you tune them. About 70-80% of the transactional issues are common, but a lot of it's not, even in companies in the same industry. So I want to stop talking now. We can talk later if we want to, because I want to give Sam a couple of minutes.
Yeah, no, so thank you again for everything, all the experiences that we've shared. Given the time, I think we can maybe open it up for questions and maybe last minute comments if we've got a minute or two left. So are there any questions in the audience? You've heard all the experiences. We've talked about technology, we've talked about resilience, we've talked about companies like Amazon, we've talked about the Amways of the world, we've talked about small and medium businesses, the platforms, the technologies that are being used, some of the challenges that we've seen from a network design standpoint, the capital side of things that support the infrastructure and the growth of these supply chains. But I think we've got one question.
Some of the biggest am I audible? Okay.
Now you are.
So what are some of the biggest pitfalls do organizations make when selecting a logistics software provider?
Logistics software.
The biggest mistakes they make when selecting? It probably has to do with onboarding and change management, regardless of industry. A lot of the times, a lot of companies overpromise, underdeliver, and probably everybody in this room has gotten stuck in an onboarding process that's taken 5, 6, 7, 8 times longer. We see people that, not with us, but with other companies, are stuck in onboardings for longer than 12 months. So that's probably the biggest pain point I would see, other than like the product itself just not being as advertised. But we try to stay super duper far away from that, and we try to do all of our onboardings in 2 business days, and try to be as lightweight, just add water as quickly as possible. So.
Thank you.
Cool.
We got one more?
Hey, good afternoon. For the interest of time, I'll try and be brief. My question is about AI and security and communications. I think Noel earlier spoke about the port optimizer, and Gene Sirocco may have mentioned that yesterday as well. With the emergence of AI, and I'm in the rail industry, so typically in the railroad industry, we've hoarded information, and it's been real hard to get information out of us. It's been hard to get information out of the shipping lines. And so now with the optimizer, that was kind of a game changer to start merging some of that information. and you still had all of the large companies and all the sectors of transportation that are still concerned about that information being out there, right? And their customers having an opportunity to get to that information. And I see AI as an accelerator to that. So my question ultimately is, what are some of the measures in place to kind of address that issue of the concern of your customers having all your information, your competitors having all your information? Then also with the emergence of AI, when you look at it from a costing standpoint, now it's also going to benefit the other folks on pricing. And that's a huge issue for companies. And particularly with the students in here, they should know that as well. That's a huge concern. And then when you look at the pricing, the competitive portion of it, and then the last piece of it is it now opens the industry up and all of your competitors for you to take a wider lens look at the productivity of your competitors or the productivities of other modes in the transportation industry. And just as we had with the port calls during COVID, it opened up a lot of issues that were the elephant in the room, right? Where people are looking at, well, there's room for improvement there, room for improvement here, room for improvement there. AI is going to be a huge lens on that. And I think there's going to be a number of years where people are just sitting back looking at, well, how do I be more productive than this company here? And so that's the basics of the question. Thanks.
Sure. Thank you. Anyone on the panel?
I think, Sam, you should take it because you and I both have one thing in common, that 25 years ago when we were doing our PhD in topics that are today under AI, we knew the math was there, right? So we knew the data that was needed. And it's only because of the computational complexities that have come up that these issues are coming up.
Right.
Why don't you advise them and answer this question from your side?
Sure, absolutely. Thank you. So I think what we're seeing is the evolution of AI. What AI allows us to do is to start to streamline and like we talked about, looking at some of the data, being able to scan through some of that data, but the scan rates are lower. As we start to get better algorithms in place, better ways to decipher that, as new technologies come in, the ability to capture that data at the onset. So right now we're relying on paper because paper exists since the systems weren't there. We're getting to technologies that are a little bit more embedded in the process. And as companies start to transition to some of that, the data will flow a lot easier. The integrations will become a lot easier. The stuff that's still on paper that requires manual intervention, that requires potential visual interpretation, we're at a cusp right now where we're starting to see the vision OS type of solutions that are coming out for the future. As we start to look to the future, one of the areas that is going to come out is you don't necessarily have to actually have something written to capture information. By looking at it, by just taking pictures and assessing those pictures and capturing that information, you can convert all of that information into data, which can be then used. Now, in terms of actually sharing what you share, how you share, that's a separate situation, but given the fact that it's now digitized, the digitization will allow you to then control that sharing. And we've seen that, when we started with e-commerce, everyone was concerned about, well, I don't want to put my credit card somewhere because I don't know who's going to see it, and somebody might start charging something on it. Today, the same thing is happening with the companies. Companies are starting to understand that by sharing this information, there is going to be a lot more collaborative effort, and it is going to reduce their cost. And it is going to allow things to move a lot more smoothly. So,
thank you. That's great.
We've got one more question.
Thank you, and thank you all for being here today. So I have a question, and speaking on network design and distribution centers, and I work in retail. How can I bring this network optimization in-house instead of partnering with third-party experts like yourself or expensive consultants? Andrew, you spoke on it really well. How many nodes? Where are the nodes? How do I optimize, duty savings and minimize split shipments? We're pretty scrappy, so we do it internally across spreadsheets and emails. Is there some kind of software or team structure design you suggest? I know we've played around with LlamaSoft in the past, but we're clearly not a super digitized supply chain quite yet. How would you recommend to kind of bring some of that in-house and get scrappy doing it internally versus leveraging third-party expertise?
So maybe I can take that, and we'll defer to Das as well. So in the analytics you're doing, you really do want to understand the tool sets. You don't have to be the expert in all of them, but you have to understand so you know what you're buying, right? And so my first recommendation, I gave a talk a couple of years ago to some military comptrollers, and it was all about analytics, right? All the way from the stats we forgot about in undergrad through AI and machine learning and other tool sets like that, a whole range with classes under them, and then said, now, personally, you can start with free YouTube, you can do Coursera or Udemy courses, don't pay $150, wait till they're on sale for $19.99 with 4.7 stars, all the way through degrees and graduate degrees in analytics. But you need to do your personal homework and understand what are you trying to study. If it's optimization, you can learn linear and nonlinear optimization. There are companies that sell those tools, but you won't know truly what you're buying. As we talked about, Michael brought this up, you won't know what you're buying until you understand the basics of what the conversation is so you can ask the right questions. And you can build some of those tools in-house to start. You may later, as you grow, buy more expensive tools and hire some of these good-looking, expensive consultants, but you don't need to do that. But you do need to do your homework. So it's all about learning, and it's learning not only in the graduate programs, it's after you get out. We can talk about this afterward if you want to send me an email or something. I can send you the slides. There's a lot of things you can do yourself and your organization can do to do your homework so you can eventually get to working with really good companies that do what you need and don't do what you don't need.
I just wanted to add that, we met yesterday, right? You will actually learn these methodologies in DSO 520, which is logistics management, where we talk about exactly how you want to build it yourself internally.
Thanks, I'll make sure to sign up for that one.
We're expecting an A.
Go ahead, please.
Hello, my name's Nyariana Micahel. I'm the Chief Information Officer at the Port of Long Beach. And for many years, we were looking at supply chain optimization. We've got several initiatives in place. But I wanted to I love data. Data's in my background, my backbone. I love everything we're all talking about here. Things are finally starting to come to fruition that we've been thinking about for 30 years. I wanted to address the question about AI, cybersecurity, and communication. Because when I led the supply chain optimization and data, that was one of the key things that we're talking about. The exponential growth of artificial intelligence is different. I remember writing my first AI thing back in, I don't want to date myself, but one of the key things that will need to happen across companies and across nations, there's going to have to be some standardization of certain models. Some of it is the data models, but there are other models in artificial intelligence, because how can you really, with the geopolitical situations, this can be weaponized. And that was a really good question. Most of the companies that I work with everywhere, they don't trust. When people don't trust, you can beg, they will not provide the data until they have to in a reactive way, and then it's too late for a lot of things. So I think we have to acknowledge that we as technologists have to step out of that role of being the technologist. We can unleash all kinds of things in the world, and I do believe this is similar to when somebody looked, we can split the atom bomb, but it is. And so that may be beyond this, but I wanted to address that this is a very, very real concern, and it's something that I've been working with for a while. So there's some type of standardization and agreement across several areas, and I feel that the supply chain would be an amazing place that has a lot of value to start with some of that, or at least hopefully we're included in those discussions. Thank you.
Thank you. Thank you. Yeah, just going to wrap it up. Thank you, everyone.
Hey, thank you, Sam and team. Give them a big round of applause.